here's, I think, the issue, which is it's clearly not helpful that the president is making these kind of comments, but this is Trump being Trump, and I think we can't take it too seriously. And I think the reason why is where you'd really worry is if the president was making comments like this and then taking actions to actually interfere with the independence of the Federal Reserve. In fact, what's actually, in some ways, actually very good and also surprising is how strong the appointments are that Trump has been making to the Federal Reserve recently. Jay Powell, we have the situation with Nellie Lang just recently announced, Rich Clarida, the new vice chairman. These are just superb appointments. And so I would worry much more if Trump was saying these kind of things, if he was actually doing things that were hostile to the Fed and really trying to interfere with their independence. But, Trump loves to say wild and crazy things, and this is just another example of it.
Alan, it does raise the question of what true interference would look like. I mean, issuing your own dot plot, saying which way you would vote at a meeting if you were at that table. I mean, do you agree with at least Kudlow's view that this is not interfering with the independence?
With Mishkin's view, I think I agree with. Yes. Trump shoots his mouth off on every subject without any knowledge of what he's talking about. We're used to that. Action would be something like making terrible appointments to the Fed, which, as you just heard from Rick, is the opposite of what he was doing. Bringing up some of the things that Congress had rejected in the so-called Choice Act that would put shackles on the Fed of various sorts. I wouldn't worry about if he spouted off at the mouth and said the federal funds rate should be 1%. The key thing there, which the Fed is doing exactly correctly now, is that the Fed not take the bait. I think they're all too smart to start engaging in a verbal ping pong game with the White House. I don't believe they'll do that. I think they'll basically ignore him.
Fred, there seems to be this
and I completely agree with Alan on this.
Okay. Fred, there seems to be this big sort of brewing debate, especially in light of what we've seen in markets in the last week and a half around the normalization process by the Fed. What the neutral rate should look like and also how quickly we get there. Break down for me what you think normal should be, especially given the fact that we have seen the market moves we have and the fact that we have this whole generation that's now invested in the market, millennials, that really haven't known anything but unprecedented monetary stimulus.
So I think it's actually important to recognize that we don't really know exactly what neutral is. This is very important in terms of thinking about how to do monetary policy, that we frequently talk about this neutral or equilibrium real interest rate, and we really don't know exactly what it is. And in fact, you have to be open to the fact that when you actually do policy, it may not work out quite the way you hoped, and you'd have to change things. This is very similar to the issue of what NAIRU and the natural rate of unemployment is. We don't exactly know. The Fed has changed its views on that very substantially recently. And actually, if you look at the dot plots, they've changed their views on what the equilibrium real interest rate is. So on those basis, I think the issue is we can't be sure, and we actually can't be fanatic about it. If you try to actually stick to a number that you think is the right number and you're wrong, boy, that can create huge problems, and that has happened in the past.
Alan, over the past couple of days, we've had a few people say, well, the U.S. has been outperforming the rest of the world in terms of the stock market for quite a while now, and that couldn't continue forever. But today, we got a rebound. Things are in the green. What's the lesson that we take away as far as the U.S.'s ability to disconnect from the rest of the world financial performance-wise in the stock market, and how does that play into what we should expect to see over the rest of the year?
Well, I think first, if I step back one to the U.S. economy, I think we have more ability than most countries because of our size and our relative lack of dependence on exports and imports compared to most countries to disconnect substantially the economy from the rest of the world. And some of that is happening now. So that's a jumping off point for the stock market, but it's only a jumping off point. And you know, the stock market, I think Rick used the phrase before, wild and crazy guys. There are a lot of wild and crazy guys in the stock market. Stocks go up, stocks go down. You know, I think I looked a little bit before I came on camera, but it may have changed radically by now. We're down about 4% over the 3 days. So who knows if 4% higher or 4% lower is where the stock market should be. I certainly don't. And frankly, most people that aren't trading stocks for a living, don't care that much either.